Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you all, depending on whichever part of the world you are tuning in from. As always, I'm very excited to welcome you again to another promising edition on the Forex Morning Mastery. In fact, our first edition for the new week. Happy New Week to you guys, and I do hope you had a wonderful weekend out there. For me, it was very, very splendid, beautiful, and of course, very, very short. I hope you had a wonderful weekend. Um, Good morning to you. So, today we are going to be diving right into um, our participation for this week's trading activity. And in that regard, we are going to be looking at three financial assets as usual, which includes the US OILSPOT, the GBPUSD, and of course my favorite, the XAUUSD, popularly known as the gold spot. And last week we did very well on this asset. We did very well on the US OILSPOT. The GBPUSD took advantage of the uncertainty surrounding the Federal Reserve interest rate cut decision to move to a monthly high, and of course the XAUUSD also skyrocketed following the softer US economic data that came in last week Friday. And in fact, this set the tone for quite an interesting week for us, especially as we look forward to some significant US macroeconomic data coming up this week, which is going to be playing a key role in determining whether or not the Federal Reserve is going to be cutting interest rates sooner or later. And in that regard, I do have very interesting trading setup, simple, of course, to help us navigate the current market dynamics for this week. And during the course of the weekend, I was able to share only one video publicly, which is the XAUUSD. So in that regard, we are going to be doing a top-down analysis together on the GBPUSD and the US OILSPOT. So you have the privilege of seeing how I do my analysis from the higher time frame right down into the lower time frame. So you don't want to miss out on this session, as today's session is going to be serving as a platform that we are going to build upon our trading activity for this week. So grab your favorite beverages, coffee, whatever you have, and try to stay tuned in. And for those of you who are actually joining us for the first time, you are highly welcome on board, and I'm very, very excited to have you around with us this morning. Well, you may be wondering, what is this all about? What is it that we do here on the Forex Morning Mastery? So to simply put, we run this 3 times in a week. That is Mondays, Wednesdays, and Fridays. And in fact, this is a platform where we come together to do follow-up details on all of the assets we are monitoring for the week. So we come in here every day, do a follow-up detail, and of course look at how we can strategically position ourselves for the next move. And it's important for us to note that this is not a signal service platform, but instead an avenue where we all come together to have a deep understanding of how market participants are behaving in the market, and of course use this information to look out for areas, levels, and structures that will be much more reasonable for us to look out for either buying or selling opportunities. And depending on what type of trader you are, be it scalper, day trader, or swing trader, you can use this information to tailor your approach accordingly. So we do this 3 times in a week, like I said earlier, and of course an alarm just struck into my ear right now, so it's okay. So we do this 3 times in a week, and trust me, the more time you spend with us in this community, the better you get to understand my analytical approach, which eventually will help you in developing your trading approach. So once again, I welcome you on board and encourage you to actively engage in the comment section. Now, if you have any questions as regards to the financial market, feel free to drop them in the comment section. I'm here and willing to be of help in that regard. And do not forget, if you have found this content helpful and useful in making your independent trading decisions for today or for this week, I will really appreciate your support by giving the video a thumbs up. And please, to also help this video to be pushed to a wider audience we may find this content beneficial, let us drop in the Forex Morning Mastery tag in the comment section, as this will help push this video to a wider audience. So thank you very much, guys, as you do so. I see you, Tamiklo. Good morning to you, Tamiklo. Trust you're doing very well. Glad to have you around with us this morning. So with that being said, here we will be diving right into the business, and as usual, the first thing we normally do every morning is to keep tabs with the fundamental factors that will be influencing the sentiment in the market today and of course for the week. And by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and, most importantly, timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on the asset we are looking at for this week, we are going to be focusing, we usually focus on high impactful event from both economies, that is the United States and the United Kingdom economic docket. However, for a day like this, that is for a day like this, when we do not have any high impactful event, we would like to include the mid-tier feature so that we can have a broader view into what will be the market driver today. And if we do that correctly, you will see here we have the Bank of England Haskell speech, which is coming up in about 2 to 3 hours from now. Haskell is a member of the Monetary Policy Committee for the Bank of England, and whatever he says will definitely be bringing some insight into the economic outlook, interest rate decisions, and their monetary policy in the nearest future. So majority want to be looking forward to that. And of course, since we are monitoring the GBPUSD, we really do want to have an insight into what is going to be saying. Of course, this will be giving us some clues on the directional path of the pound sterling during this significant period. Then also, much more later in the day, we are going to be looking at the BRC like-for-like retail sales report, which is usually published by the British Retail Consortium. And in fact, this data gives us an insight into the measure of the change in retail sales from participating stores in the United Kingdom. Now, this is definitely going to be giving us a significant insight into the performance of the sector, as a positive sentiment, a higher than expected data is going to be giving us a positive sentiment in the retail sector, while a lower than expected figure is going to be giving us a signal into economic weakness and negatively impact the sentiment in this market. Now, looking at the data here, if we look at the previous data for the month of May, you see here it came in at 0.4%. So it tells us that there was a 0.4% expansion in the retail sector of the United Kingdom last month. And based on what is on ground right now, economists and market participants are projecting that the data may come in at 0.2%. Now, what does this mean? It means that market participants are expecting a decline, or let me say a contraction, in the retail sector in the United Kingdom. Though it's still an expansion, it's still better than being in the deficit side, but it's still a little bit lower than the previous data. So we are going to be looking forward to see what the actual data is going to be like. Will it be just as expected, below expectations, or even beyond market expectation. And of course, we know how this is going to be influencing the sentiment in the market. If the data comes in higher than expected, we should be expecting a positive traction in favor of the pound sterling. And if it comes in lower, then we may likely see a negative traction. And I think for today, that is all we have for today. And the next high impactful event for this week is coming up tomorrow, which is the testification by the Fed chairman before the US Congress. This is another impactful event, and I think I have a strong feeling that due to the anticipation of this testification, the testimonial of the Federal Reserve Chair before the Congress, we may likely see an extended sideways trading activity, as market participants may want to step aside waiting for this event to happen, at least have an insight into what it will be saying about the US economy before making any aggressive bets. So in light of this development, we should not ignore the potential that extended sideways trading activities could happen today. And if we have any position triggered, we want to be ensuring that we move our stop losses accordingly to secure every position that we have triggered to mitigate against any risk of sudden rebound, as price is likely going to snap back into entry point. So with that being said, here we will be diving right into the business, and the first asset we are going to be looking at today. Please hold on a second, please. I would really appreciate you give me some 10 seconds. I want to do some little adjustment here, and I will be right back in a moment. Thank you, please. So sorry for the break. I'm right back here. Okay, so the next asset we are going to be looking at this morning is the USOILSPOT. As usual, this is the first asset we normally take on every morning. And so let's see what is really going on in the market. Now, before we go into the details here, I would like to talk about last week's trading session where we were able to capitalize on both bullish momentum. Remember, through the first half of last week, it was more of a bullish momentum. We rode the momentum all the way from the $83 area right into that $84.30 level before that bearish traction began during the later part of the week. And following that and looking at what is going on this morning, you will see that the week has started on a strong bearish note as price action had continued to find lower lows and lower highs. Now, in light of this development, what are the chances that this momentum will continue to the downside? Are we going to see price drop further, or are there chances that sellers could buyers could come in and take over the market. Now, before we go into the details on the lower time frame, which is our execution time frame, it's important for us to have a deeper understanding into how market participants are behaving from an holistic perspective. So today's session, I will be starting from the 4 hours time frame. There's nothing really on the daily time frame, as the structure still remains the same as what we have been deliberating on in the last couple of weeks. Now, looking at the 4 hours time frame here, and after taking into consideration the character of price action since the beginning of the month of June, that's about historical data of about 6 to 7 weeks, it is quite clear that the market has been very bullish. And to emphasize the strength of the buyers in this market, connecting the series of high and lows here gives us a beautiful ascending trend line to work with for this week. Now, for those of you who have been with me for a while now, you know how we use our ascending trend lines. As long as price remains above the ascending trend line, we want to continue to look out for patterns and structures that support the idea of buying the asset. However, if price drops below the ascending trend line, then we can start considering selling. And if you look at what has been going on since the beginning of the month of June, at no point in time has price broken down the ascending trend line until this morning. Now, besides the ascending trend line, here are a couple of levels. No, I think it's only one right here, which is our key level at the $83 area. So this is my key level for this week. And you know how we use our key levels. It serves as a yardstick guiding our trading activities for the incoming week. Now, if price trades above the key level, we look out for patterns and structures that supports buying ideas. And if price breaks down the key level, we look out for patterns and structures that support selling ideas. Now, with our key level situated at the $83 area, it's given me it's also doubling as a neckline of a potential reversal pattern. Now, let's look at this closely. If you look at what has been going on in the last couple of weeks, you can see we have an impulsive bullish leg all the way into the $84.50 area. We saw price come back into the $83 area during the beginning of this month. Price came back into the $84.50 level, and the inability of buyers breaking out of that structure could signal the beginning of profit-taking activities, which could reflect on the chart as a retracement move. Now, with the situation we have here, it's looking as if we have a double top structure, which from a technical standpoint is considered to be a strong reversal pattern. And whenever we have this kind of setup identified, we immediately want to mark out our neckline, which I would like to use my key level to also double as the neckline of the structure. Now, with the situation we have here, we want to be seeing price break down our neckline, retest it if possible to confirm that this is a valid reversal setup. Hence, we want to be joining a bearish momentum. And another interesting thing about this neckline is how it shares a beautiful confluence with that ascending trend line we have here. Now, price breaking down both of these structures, it's going to be a beautiful opportunity to join a decline. Now, the question now is, how far will this bearish momentum go if that is going to be the case? Well, for us to be able to navigate that, I would like to use my Fibonacci retracement tool, capturing the previous impulse leg, and of course we want to be aiming at our golden zone area, which will be falling within the 50 and the 78.6% of the previous impulse leg. Now, if we do that correctly, we are looking at between $78.50 level and the $75 area as a TP target for sellers. So I would like to label this for visual clarity. So we have sellers between, what did I call it the other time? I said $78.50 level, okay, between the 75, okay, and the $78.50 level. All right, so $78.50 level. Good. Now here we go. So we'll delete this one, we no longer need it. So we are going to be looking at a TP target of, let's say, a minimum of about 44 pips. Is this 44 pips? Hold on a second. Okay, yes, 44 pips to a maximum of about 78 pips to catch here. Now with this whole situation here, though I already have a sell position triggered, but I will be sharing with you how I got into that structure. Now with the information we have gathered here on the higher time frame, you would agree with me that we are at a crucial juncture in this market where a breakdown of the ascending trend line will welcome selling opportunities. Now scaling down into a much more lower time frame, our execution time frame, that is the 1 hour time frame, we begin to see things much more clearly. Now right here on the 1 hour time frame, this is what I was able to come up with. So you can see our key level remained quite intact at the $83 area. Price has broken down our key level, welcoming bearish ideas at this point in time. And then the other factor here is the fact that during the first 1, 2, 3, 4, 5, 6, 7, 8 hours of the new week, we saw how price action was oscillating right around our key level. And then in line with that, it formed a range bound structure where price action was initially confined within the $83.30 level and the $82.80 area during the first 8 hours of this week to give us an insight into the indecision that was going on at that point in time. And of course, you know how we treat our range bound structure in this community. We exercise patience and wait for price to either break out of the resistant line of the range to give us an opportunity to buy, or the breakdown of the support line of that range to give us an opportunity to sell. So with this understanding in mind, I got my sell position triggered at the breakdown of the $82.80 level. And for those of you who capitalize on this opportunity, who had used the knowledge acquired in this community to capitalize on this opportunity, well done and kudos to you on that one. So at this point, we have a sell position triggered running with about, let me see how many pips that is. That's about 45 pips in profit at this point in time. So it's high time we want to be moving our stop losses to secure the current position. Worst case scenario, let's move it to break even, so that the worst case scenario, if price snaps back into entry point or reverses at this point, the worst case scenario we will be having is a break even. Now for those of us who had missed out on this opportunity, there is no cause for alarm. The week is still very, very early, and I still have a strong feeling that we still have more opportunities to capitalize on any opportunities at this juncture. So for those of us who had missed out on this opportunity, I would encourage us all to exercise patience, and let's wait for price to probably come back and retest the structure that was broken. That is something like this. Price coming back to retest the structure in an attempt to continue the downtrend scenario. So that is one way we can wait to look out for new opportunities at this point. Then another thing I would also like to acknowledge here is another support level, which is, if you look left here, you will see that we have something around the $82.50 level. So for the sake of clarity, let us mark that out immediately. So we have the $82.50 level. That's another support line. I will explain to you in a moment. Let me sort this out quickly. All right, so we have the $82.50 level. I encourage us all to mark this one too on our chart. It's very important, as we will be needing it to guide our trading decisions today. Now, the reason why I marked out this level is basically because of how this level had played a significant role since the last trading day of the month of June. Now, if you look at the structure closely, you see here we have a selling niche around this area. we have price breakout of structure here as at the beginning of this month. And since price broke out of the structure at the beginning of this month, price had remained above that structure. Now look at what has happened right now. We have an engulfing bearish candle slicing through that structure for the first time this month. Now what this simply means is that if price continues to maintain below the structure, it could be new opportunities to add more sell positions. So in fact, I missed out on that opportunity, but if you capitalize on that one, well done to you. But at this point in time, let's see if the market is going to come back and retest the structure. So we will be waiting for another confirmation here. So if we missed out on this one, we do not want to be jumping in front of a moving train. Let's wait for the train to come back to bus stop, then we can board the train. So in this case scenario, we are going to be looking out for either price coming back to retest the $82.50 level or the $82.80 area before we jump into the bearish continuation. Now, how do we position ourselves for this? Well, as soon as price gets into these levels, the $82.50 level or the $82.80 area, we scale down into a lower time frame, that is 5, 10 or 15 minutes time frame, where we want to look out for signs that buyers are finding it difficult to climb back above the structure. And this usually reflects on the chart as continued selling pressure below the structure. If we see something like a shooting star candle, selling pressure around that area, we can find it comfortable to join a decline to the downside. So what we are going to be looking out for now is to see if this is where the selling pressure will happen, that is the $82.50 level or the $82.80 area. But trust me, I will be with you in the comment section of both my TradingView and Telegram platform to give us all updates as at when due. So at this point in time, and for those of us who had capitalized on this bearish momentum, kindly move your stop losses. Let's secure this current position and wait to see how the market will react going forward. So this is my simple view on the US oil spot this morning. If you have any questions or you need some further clarifications, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds as always to see if there are any questions whatsoever before we continue with our analysis for today. So see you in about 10 to 15 seconds, and do not forget to give that video a thumbs up. Thank you very much. All right. So I don't think we have any questions in the comment section, but I can see a couple of comments here. I see you, Ismet Kaskin. Good morning to you. Logosu Zize, good morning to you too. Glad to have you around with us this morning. Trust you had a wonderful weekend out there. And how well are you preparing for this week? Let us know your ideas in the comment section if we could deliberate on that one too as well, your strategy and your approach as you prepare for the new week. Okay, so with that being said, here we will be diving right into the business, and so the next asset we are going to be looking at will be coming up anytime soon, so stay tuned in, guys. I'll take that for the last. So the next asset we are going to be looking at this morning is the GBPUSD, that is the British pounds against the US dollar. And in fact, we have very interesting trading setup evolving on the chart right now after witnessing a choppy start to the new week. Now, before we go into the technical details, refreshing from last week's trading session, we were able to scoop in some significant amount of profit on the GBPUSD. We had over 200 pips in profit. Remember, we had multiple entries as we rode that bullish momentum all the way into over the 1.28100 area as pound sterling reaches a 1 month high for the first time in about 6 to 7 weeks. Now, as it is right now, with this choppy market condition we are seeing this morning, it's a red flag that there is uncertainty going on in this market. And before we go into the technical details of what is likely going to happen today, or what is it that market participants have been doing, let's quickly run through the fundamental factors or the market drivers that has been influencing the sentiment in this market. Now, we are going to be talking about the US economic data, of course, which has played a significant role on this particular asset. Remember, last week we saw the NFP report for the month of June, which showed a stronger than expected gain of 260,000 jobs, though this was beyond market expectation. Market were expecting something lower than the previous month, and with a rise of about 4.1% unemployment rate, it's the data from the NFP doesn't look convincing that the US economy is rebounding at this point, and we can tell that inflation at this point is gradually dropping, easing, which is of course inciting the idea that Federal Reserve may likely cut interest rates anytime soon. And this of course has helped the pound sterling to rise and continues to find higher highs. Now, the recent election, the pound sterling also had received a boost from the Labour Party's landslide victory in the United Kingdom's general election. I think they secured over 410 seats, a significant increase from 2019's figure. And this decisive win is generally viewed as favorable for the United Kingdom financial market, and it's of course providing additional support for the pound sterling. And if you would ask me personally, I think the path of least resistance for the pound sterling will continue to remain to the upside. Now, while the GBPUSD pair is currently trading within a choppy market condition, the potential for a Fed interest rate cut continues to weigh on the US dollar, potentially limiting further downside for the GBP USD. Now, with this whole situation right now, it is important for us to also take into consideration the key factors as regards to the fundamental that will be happening this week, and this will definitely be influencing whether or not the Federal Reserve will be cutting interest rates. Now, what are the things we are going to be looking forward to this week? We are going to be looking forward to the Fed Chairman's testimonial tomorrow, Tuesday. We are going to be looking forward to the most anticipated event for the week, that is the CPI data, which is considered to be an inflationary gauge of the US economy. And I think majority wants to see what this data will be bringing, especially after a not too impressive economic data from the United States in the last couple of weeks. So everyone will be looking forward to that one too. Then we also going to be looking forward to the PPI data, that is a producer price index, another inflationary data, which is also coming up much more later in the week. Now, for the United Kingdom economy, we do not have any high impactful event, but market participants will be looking forward to the preliminary UK GDP growth report, which I think is coming up on Wednesday. So we're going to be looking forward to that one, and that will also be influencing the sentiment in this market. Now, let's look at how the market has been digesting these contrasting views behind the scenes and how they are using that to strategically position themselves for the next move. Now, for us to anticipate the next move, let's first of all take into consideration the holistic view in this market. So my analysis for this week is starting from the 4 hours time frame. We do not have anything specific on the higher time frame really, so at this point we are going to be starting on the 4 hours time frame. Now, on the 4 hours time frame, I have a couple of structures here which will be guiding our decision, one of which is the descending trend line after taking into consideration the character of price action since the beginning of the month of June. Now, if you look at this closely, you will see how the series of lower highs here gives us a descending trend line, and in fact, if we project this trend line up here, we have another one right here. Now, in addition to this trend lines is my key level for this week, so we are going back to the 1.27 area. For those of you who have been with me for a while, you know how important the 1.27 is. Remember, we have used this 1.27 multiple times to guide our trading decisions for every week, and now we are back into the 1.27 area, a level which has played a significant role in determining the direction of price action for a very long time. But for this case scenario, we are going to be looking at from the mid-month of May. That's about 7 weeks thereabout. This level here had played a significant role in determining the direction of price action. Now, let's look at what has been going on here. Look at what happened here in the month of May. We see selling area. This area was a selling niche here. Then we saw buying niche coupled with some choppy market condition around that area. We see here it's a buying niche here, buying niche. You can see how this level here had played a significant role for buying power, and not until the mid-month of June, that's about 3-4 weeks ago, we saw price break down the structure, and for the most of the weeks in the month of June, price action was trading below the 1.27 area, and not until last week's trading session we were able to capitalize on the breakout of the structure and rode that momentum all the way into the 1.28150 area. So you agree with me that that area seems to be the most precise key level for this week. Now, as it is right now, you will see that price action is back into a crucial juncture in this market, which is the 1.28150 area. Now, this level as well has played a significant role in negating all attempts by the buyers to break out of that structure, making it a strong selling niche in this market. Now, look at this here. We have selling niche. Look at this here. Sellers kept on negating all attempt by buyers to break through, though we had a breakout here, but it didn't last long, making it a false breakout. As you will see, like 4 to 8 hours later, price dropped back below the structure. Now, as it is right now, price is back into this area. So let me say we are back within the seller's territory, and the question at this point in time is whether or not buyers will have that strength to break out of the structure convincingly, or are we going to be seeing selling pressure resume around that area to incite a retracement move characterized by profit-taking activity. Now, from a technical standpoint, or let me say from a theoretical standpoint, you will see here price broke out of key structures here with this impulsive leg. We see price break out of the descending trend line here. That is 1. Okay. Price also broke out of this other trend line. That is 2. And then price also broke out of this key level at the 1.27. That is 3. Now, from a theoretical standpoint, it is expected that when price break out of key structures like this, at a point in time, we expect that the market may come back to retest any of the structure in an attempt to continue the uptrend continuation. Now, if that is going to be the case, and considering the fact that price is back within the seller's territory here, any form of reversal pattern could incite a sell-off to the downside. It could come in the form of a double top structure, head and shoulder, or a rising wedge, whichever case it may be. And if we look at the distance between here and here, we are looking at a minimum of about 100 pips to a maximum of about 175 pips if price action comes back to retest the other trend line. So we are not going to ignore the potentials that sellers will come in at any point in time. So this area is a crucial juncture for us to monitor. Then the other scenario that could happen around this area is if price breaks out and retests the 1.2815, this could transition into an uptrend continuation. So if we see an uptrend continuation pattern around this area, it could welcome buying opportunities. Now, with this understanding in mind, let's scale down to our execution time frame, the 1 hour time frame, where depending on what happens during the the early hours of this new week will help us determine if we are going to be buying or selling today. Now, scaling down into the 1 hour time frame, I was able to identify a simple structure as always. As you will see here, the first 8 to 10 hours of the week, the market has been consolidating and confined within the 1.28190 level and the 1.27850 area to emphasize the prevailing uncertainty in this market right now. And for those of you who have been with me for a while now, you know how we use our range bound structure. Whenever we identify them, we want to exercise patience and wait for the market to make a directional decision, which will come either in the form of a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line of that range bound structure to give us an opportunity to sell. Now, with this understanding in mind, how do we intend to position for the next move? So at this point in time, it's quite reasonable that if price breaks out of the supply zone we identified on the 4 hours time frame, it will be a good opportunity for us to buy. And let's ensure we have enough breathing space for price action to move around. So a stop loss of, let's say, about 20 pips thereabout will look very reasonable at this point in time. So you can use that to calculate your risk in percentage on your portfolio size. So we are looking at buying above the 1.28150, 1.28190 area for the early part of this week. However, if sellers continue to show their strength around this area and buyers find it difficult to continue the momentum where selling pressure persists below the structure, well, I'm having a sell stop order below the 1.27850 area to capitalize on a bearish opportunity. But I still think that we could still join a sell position even before the breakdown of that structure happen, basically because of this ascending trend line you will see here. So let me zoom out a little bit so we can see things from an holistic standpoint here on the 1 hour time frame. Now look at what I did here after considering the character of price action since the last week of the month of June. You will see that we have an ascending trend line which buttresses the strength of the buyers in this market. So I have a second one too right here, as you will see. So we have a couple of ascending trend line to work with. Now if price action breaks down the first ascending trend line and we see price do a retest of it with continued selling pressure, something like this, let me give a visual representation. If price does this breakdown retest of structure, we will be willing to join a bearish move even before the breakdown of the 1.27850 happen. And of course, if this momentum begins and price does this whole scenario, we want to be moving our stop losses as soon as price gets closer to the second ascending trend line. So we move our stop losses to probably around the 1.27850, securing the position while we exercise patience and wait to see how the market will react to the second ascending trend line. So if we see reversal setups like double bottom structure here, this could incite the uptrend continuation. But if price breaks down, retest the trend line, then this could incite more selling opportunities. But I will definitely give us updates as at when due. But I still think from all ramifications and considering the fundamentals behind the scenes, I think the path of least resistance is looking bullish, but we cannot base our decision on emotions. Rather, we want to see structures that gives us a detailed understanding into how market participants are behaving right now. So let's see how the market will play around this range bound structure, and depending on which direction the breakout happens will give us an idea of where price will be going for this week. So this is my simple view on the GBPUSD for today. So I encourage us all to mark out this range bound structure and of course those ascending trend lines, as we are going to be using them to navigate this current market dynamics today. So this is my simple view here. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10-15 seconds as always to see if there are any questions before we move on to the final asset on our watch list for today. And for those of you who clicked on that like button, thank you very much. I really appreciate from the bottom of my heart. And for those of you who are yet to click on it, please, it doesn't cost you anything. In fact, you are helping this community to grow, and thank you very much as you do so. So see you in about 10-15 seconds from now, after which we'll begin the last asset on our watch list. See you soon. So in the absence of no question, I want to assume that we are all on the same page. So I guess it's high time we moved on to the final asset on our watch list for today. And please, let's drop in the tag Forex Morning Mastery in the comment section. Please, let's do this right away. Shall I wait for you to do that? Let's see a couple of Forex Morning Mastery in the comment section. I think I see you, Ibrahim Sadiq. Good morning. Glad to have you around with us. I want you to type in Forex Morning Mastery in the comment section. Let's do that right away so that the algorithm will promote the video to a wider audience. All right. So please, let's do that. Type in Forex Morning Mastery, hashtag Forex Morning Mastery in the comment section. So the final asset on our watch list for today is my favorite amongst them all, and that is the XAUUSD, popularly known as the gold spot. And what a beautiful start to the week we have here. We already have two sell positions triggered at this point in time, one at the 2,381 and the other one at the $2,377 area. I shared an update this morning on my TradingView and Telegram platform on this particular asset. We already had the breakdown in my commentary this morning, and we had price come back to retest the structure, and then we joined down, and we also had another one had the breakdown of the 2,377, and it has been a wonderful one so far. So for those of you who are taking advantage of this opportunity, well done, kudos to you guys. So we want to be moving our stop losses right now. Let's secure this current sell position, because we never can tell. Buyers could come in anytime soon, as this bearish momentum I'm seeing right now could be considered to be a retracement move, which is a sign of profit-taking activities, as those who had bought the gold during the course of last week may want to start taking some profit off the chart before they continue the uptrend at this point. So please, let's move all stop losses, secure the current sell position, and the most appropriate area is moving your stop losses to the second entry, so that the worst case scenario for the second entry will be at break even, and of course you would have scooped in about 42-45 pips on the first sell position. So well done guys on that one. So in preparation for today, how do we intend to maximize the potential of this move? And of course, we also do want to have a deep understanding into what the driving factor of this market is, and what the market participants are likely going to do in reaction to this development. Now, I have a couple of market drivers which I'm willing to share with you guys, so that you can also have an insight into what is going on in the market and can use that information to logically make a well-informed trading decision. So here we go. I have I think I have 4 market drivers here of influencing the sentiment in the gold market. Now, the top one on the list is the People's Bank of China's halting gold purchases. Now, from the report we got earlier today, so Sunday, sorry, the report we got earlier on Sunday shows that the People's Bank of China has stopped buying gold for the second consecutive month. And this probably could incite fear in the market, where market participants could start considering taking some profit off the chart. And I think we're seeing some signs as regards to this. Then the other factor here that could also influence the sentiment in the gold market is the speculation on Federal Reserve rate cuts. Now, the rising speculation that the US Federal Reserve might cut interest rate in the third quarter could lift gold prices up, as lower rates make non-yielding assets like gold much more attractive. Then the third one here is the political uncertainty in France, which has a chance of influencing the sentiment in the market. That's another perspective to it. Then another factor here that's going to be influencing the sentiment in the market is the Fed Chairman Jerome Powell's testimony coming up later in the week, and of course some US macroeconomic data. Now, we have the Fed Chairman speaking tomorrow. He's having a testimonial in front of the US Congress tomorrow, so market participants will be looking forward to what he says to have an insight into the monetary policy of the United States, the economic outlook, and of course potential interest rate decisions. And then we're also going to be looking forward to another important event, which is the CPI data, which is coming up on Thursday. We also have the PPI data too as well, and then the Consumer Sentiment Index, which will be published by the University of Michigan. So these are the major drivers that will be influencing the sentiment in the gold market. Now, if you will ask me, based on what we have so far and based on the information we have prior to today's session, I think the path of least resistance for gold is still very bullish. But the question at this point in time is, what path is it going to take to the upside? Are we going to have a retracement move, that is, price retraces back into structure before it continues the uptrend move, or is price going to form a trend continuation pattern to continue the uptrend scenario? Now, for those of you who saw my video on the XAUUSD, you will be familiar with this current structure we have on the chart. We had our key level at the 2,350, as you will see here, and we saw how this level was broken last week. And for those who missed out on that video, you can check the link right in the description box below. We have the link right there. Check it out after the live session so you can have a deeper understanding into how we got to this point you're seeing on the 1 hour time frame. So my point of view now is, will price action come back to retest the 2,350, which is dovetailing to about the 310 pips profit? So my TP target is around that area. Or will the momentum continue to the upside from here? So we have an impulsive move to work with right now. So we have an impulse leg. And if we bring out our Fibonacci retracement tool, running it through the previous impulse leg, we are looking at an area between the 50 and the 78.6% as an area where we could see potential reversal setup that could incite the uptrend continuation. So let me just mark this out right now, and hold on a second. So we have, so I'm going to call this a potential buy window. So that's what I'm going to call this. So if we see any form of reversal pattern within this area, so we are looking at between the 2,371. Okay, hold on. So let's mark this 2,371. And we are looking at the 2,358. 2358 area. So that is the area we are looking at. So let's see how the market is going to play out. So as you will see right now, price is back at the 50% retracement. Will a bullish traction begin from this area, or will it go into the 618 or into the 786? But what we will be looking out for is something like this form of reversal pattern, double bottom structure within this area. We mark out the neckline, and then of course we buy the breakout retest of the neckline to continue the uptrend move. But I have my TP target within the 2350. But if this comes up, then it is will be reasonable for us to move stop losses, take us out of the position, and then join the uptrend move. So that's how we are going to be managing this. So at this point in time, we hold on to a bearish bias. We are going to wait and see how far will this bearish momentum go before the uptrend scenario happens. And if price does not go too far to the downside, and if it begins to find buy pressure, we have a structure here that we can use to prepare ourselves for the bullish momentum. Now, if you look at what we have here since the beginning of this week, we have series of lower highs, which has projected a descending trend line on our chart. Now, you know how we use our descending trend lines in this community. As long as price remains below the descending trend line, we will maintain a bearish bias. However, if price breaches and break out of the descending trend line, then we can start considering bullish potential. So the only condition that will make us buy if price does not drop deep into this buy window is to look out for price breaking out of the descending trend line, which shares a confluence with the 2377. A retest of structure will do a lot for us to confirm this uptrend continuation. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give us update hazard when due. So this is my simple view on the XAUUSD today. We maintain a bearish bias. We have a sell position triggered at this point in time. Let's see how far will this bearish momentum go, and then we'll see what to do next. If you have any questions whatsoever, feel free to let me know in the comment section. And please, for those of you who are joined the sell position, kindly move all your stop losses and secure the current sell position. Break even looks much more reasonable, or put it at the 2377 area. So the worst case scenario will be a profit on the first position and a break even on the second position. So that is how we are going to be managing this going forward. So let's see when the bullish momentum will come in. And that reminds me, we are going to be running the XAUUSD live window today, as always, Mondays. So we are going to be running the XAUUSD live window, where you have the privilege of monitoring with me real-time price action on the XAUUSD. And for those of us who are new here, this platform kickstarts, the live stream kickstarts 5 to 10 minutes into the New York session and lasts for about 5 to 7 hours, depending on the volume of trading activity for that particular day. So I look forward to seeing you right there in the comment section of that session. And for the link to that session, you will definitely see it as soon as this live session ends. Click on that link, click on the notify me button, and you will get so that you can get notified as soon as I come on live. So thank you very much. I see you, Forex Morning Mastery. Please drop Forex Morning Mastery in the comment section. Let's boost this video to a wider audience of traders who may find the content beneficial. And for those who had clicked on the like button, thank you very much. I really appreciate. And for those of you who are yet to, please do so right away. It doesn't cost us anything. So with that being said here, let's take some 10-15 seconds break. Let's see if there are any questions. If you have any questions, you need some further clarifications, or you need some clarity as regards to the financial market, feel free to drop them in the comment section. I'm here to be of help in that regard. So let's see if there are any questions. I'll see you in about 10-15 seconds from now. All right, guys. Thank you very, very much. I really appreciate your support. You guys are wonderful. We have 15 likes. We have over 15 people on board. Thank you very much. These are ways through which you inspire me to do more on this platform. Thank you very, very much. So I think it's on this note we have come to the end of today's Forex Morning Mastery, since we do not have any questions in the comment section. And it has been a wonderful day. Of course, we were able to take on the 3 financial assets we are going to be monitoring for this week, which includes the USOILSPOT, the GBPUSD, and of course my favorite, the XAUUSD, all of which we were able to identify simple trading setups that we are going to be using to navigate the current market dynamics. And I do hope you are able to mark out these levels accordingly on your charts. If you have done so, well done to you, as they are going to be playing a major role in helping us to guide our trading decisions today or for the first half of this week. And for those of you who are joining us for the first time, you are highly welcome on board. Very glad to have you around with us. And I do hope you are able to gain 1 or 2 things from what we discussed here today. But trust me, the more time you spend with us in this community, the better you get to understand my analytical approach, which eventually will help you in making your own independent trading decision, and of course build a trading strategy around this ideology. So I look forward to seeing more of you same time on Wednesday, that is 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to review how well these assets have been doing and of course prepare ourselves for the second half of the new week. So with that being said, here we'll have to call it a day at this moment. I really appreciate every single one of you, from Tammy Klo, Keskin, Zize, Sadiq, Blackett, Warren Barr, Edwan Daphne, and of course Samuel. All of you are wonderful. I love the positive energy this morning. Good morning to you, and I look forward to seeing all in the positive side of your portfolio as we continue to monitor price action. So it's on this note I want to wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.